Hello, Rowan here. I want to talk to you about a pension crisis. Pension crisis? What pension crisis? Well, I don't know if you've seen the latest report that's just come out this month from the National Association of Pension Funds. It's a bit of a harsh reality check. What it's saying is that 80% of savers have got less than 50k in their pensions at the moment. Fewer than 1 in 5 people have the financial know-how to get the right annuity at the best price when they come to retire. And the rest of us lack sufficient understanding of things like interest rates, inflation, and how long we're going to live, and we desperately need some sort of advice. And you are right to be paranoid, because the report also says annuity advisors say that some insurers push the rates downwards at certain pension pot sizes when they can see a group of people approaching retirement, because they expect many of them simply won't bother to look for a better deal and will accept the insurer's first quote. So the market is even being manipulated to give you less money if there's a lot of people retiring at the same time. It is a truly damning report. Here's what Joanne Seegers, the chief executive of the National Association of Pension Funds, said. The annuity market desperately needs to be straightened out if the UK is to pay for its old age. People are saving throughout their working lives only to end up short-changed by a toxic system. The report was done in conjunction with the Cass Business School, and Professor David Blake from the school said this: "This report is a wake-up call to the pensions industry, the government and the regulators. If the annuity system is not radically overhauled, employees in defined contribution schemes in the private sector will continue to suffer massive detriment. And the government's new auto-enrollment regime," that's where you're going to be forced to join a pension scheme, "will fail the very people it aims to help secure financial independence in their retirement." So here you have the chief executive of the National Association of Pension Funds and a professor at the Cass Business School telling you what a state the annuity industry is in this country. And the government is about to make it even worse. Firstly, there's a fact. From April 2012, the most you can have in your pension fund is actually being reduced by 300,000, from 1.8 million to 1.5 million. And I hear rumours that the higher rate tax relief on pension contributions may also be about to be abolished. There's a lot of pressure on the Chancellor. This is seen as helping and favouring the rich. I think a lot of this will depend on how you define rich. What was your first reaction when I talked about £1.5 million? So does that sound like a lot of money to you? Does that sound like something that's only relevant to sort of fat cat city bankers or something? Well, it may sound like a lot of money, and compared to what many people have in their pensions, it is a lot of money. But I've just been online to see what sort of an annuity I could buy with £1.5 million, and the results were a little bit staggering. Here's where we are. Look, assuming I retire at 65 with 1.5 million in my pot, and this is allowing for my wife to inherit the thing as well and having it linked to inflation, the actual amount payable is £2,700 a month. In other words, £1.5 million would buy a pension of just £33,000 a year at age 65. Now, that is not a fat cat pension. That is a fairly average income for somebody who's a working professional in the UK. I certainly would be looking to have more than that for my retirement income, and I don't have anything like 1.5 million in my pension at the moment. What about if you want to retire at 55? Well, I'm 55 going on 56 now, so it would be very nice to retire if I had £1.5 million. But look what that does to the payback. If I take my retirement now, I get just £23,000 a year at age 55 from £1.5 million. And these are taken this week in February 2012 from the Money Advice Service website comparing annuities. Yes, there are one or two others there where you can get slightly more money, but these are the sorts of amounts you're talking about, even with £1.5 million in your pension pot. And what about if you're more kind of average? They're saying 80% of us have less than 50k. Well, if 50k is what you've got, I'm almost embarrassed to show you how the numbers will look, because one of them there is offering £91 a month. The best one is offering £125 a month. So that's a pension of just £1,000 a year, or £21 a week at age 65. How do you fancy living on £21 a week? Now do you see why I'm a worried man? I mean, these figures are nightmarish. They are startling, especially when you think about even the fact there's manipulation going on by the big insurance companies. I mean, I can just imagine the conversation with my wife Daphne. Oh, by the way, darling, we're going to be living in poverty from now onwards. Can you manage on a shoe allowance of £5 a month? What I think we need is we need to take personal control of our financial future, because none of these guys have got your financial well-being at heart. All the so-called professionals I've used in the past, they've charged me a lot of money for their services. The returns have not been particularly spectacular, and of course they have an agenda, and my financial well-being is not at the head of that agenda. It's a bit like trusting Fat Marjorie to run the slimming club in Little Britain. We just can't trust these professionals. We have to take control ourselves. Where can you get a better deal? Well, here's 6 of the best places you can look. If you are about to buy an annuity, don't just take the option that your insurance company offers you. Have a look at places like the Annuity Bureau, Annuity Direct, Better Retirement, the Retirement Advisor, the Open Market Annuity Service, Premier Retirement Services. These are companies mentioned in the report where you can get a much better deal, and it can make 50 or 100% difference to the income that you receive. So this is one of the most important decisions you'll ever make. Now, I want to give you a couple of gifts to help sort of soften the blow of this shock, if you like. First, if you're brave enough, I'd like to actually offer you the full report. It's a 72-page report, as I say, combining input from the National Association of Pension Funds and also from the Cass Business School. There's a link below this video for you to download that report. Be my guest to read through it if you have a strong constitution. The other thing I'd like to offer you is I'm launching a new newsletter called Graham Rowan's Wealth Watch. Comes out in the next couple of weeks, and I'd like to offer you basically a free subscription to that. It's helping you basically take control of your financial future, helping you to get money, helping you to keep it, helping you to enjoy it. Particularly focusing people perhaps in their 40s and 50s and 60s, joining me, as you like, if you like, as members of the baby boomer population. It'll be delivered to your door every month. Just fill in the details below this video and you'll get the first copy in the next couple of weeks. So hopefully that'll be something to help you as you plan and move forward. We really do have to take control of this ourselves. We cannot trust the professionals. I urge you to start getting the newsletter. I urge you to look at this report. Whatever your current age, you need to know this stuff, because this is only just starting to become understood. The fact that unless you have got a lot of money in your pension fund, you are heading for a very, very small income in your retirement. So there's all sorts of other things and strategies we need to do to deal with that. We'll cover those in the newsletter. I hope you'll find it useful and valuable, and thank you very much for listening to me today.